to a smart guy. This guy knows a lot. You like that? Is that a good way to start?
I think I've probably forgotten as much as I remember.
Irwin.
No, hey, fell out from all the worries. So
is that what the deal is?
Yeah.
All right, ladies and gentlemen. My name is Kenner French with VastSolutionsGroup.com. You're hearing the Vast Voice, where we talk about entrepreneurial issues, where if you really think about it, we're telling entrepreneurial secrets. And in this one, we're going to be talking about, Irwin's background. We're going to be talking about finance, about what it's like to be an entrepreneur, all the good stuff to hopefully add value for you, probably an entrepreneur. Irwin, thanks for being here.
No, my pleasure. This will be fun. Happy to share my 3 cents with the world, and hopefully people will learn something.
I like it. We got about 30 minutes. Let's start off. First of all, tell us your background. It's an interesting background. It sounds like you have a little bit of a New York accent.
Yes. Grew up in New York, now live in New Jersey, but for work I've traveled throughout a good part of the country. Have a degree in accounting, took the CPA exam, didn't like accounting, went to the world of real estate, where they taught me what it was like to manage the real estate, deal with union crews in New York City, and go to landlord-tenant court and see the shenanigans that some of the tenants who have mastered the system can pull at how to avoid rent for a year, sometimes longer. And then I've either been worked as a broker, worked for lenders, or working with family offices building cash flow portfolios for the next generation. And in between there, sort of giving back, working with New York University and Fordham University on trying to build out their educational platforms to sort of teach the next generation of professionals.
Holy mackerel! Really? For NYU and Fordham, you're teaching, I guess, real estate? Is that what you're doing?
Well, actually, I was in Fordham. I sat on the executive advisory committee. We helped put the curriculum together and mentored students. I had to mentor some students, and it was always mind-boggling where I guess, especially when Trump was in office and everyone said, I'm going to get rich. I'm going to do what he did. I'm going to be in real estate. And you find guys who were making a good chunk of coin who all of a sudden wanted to be in real estate. And I have to say to these people, especially if they had a family and they're married, I'm like, you're making $250,000, $300,000 a year. You're not going to make that the first year. You have salary, you have benefits. You're going to go out on your own. Are you sure this is something that your family wants you to do? Because right now it's if you, other than the last 12 to 15 months, it was really hard to screw up a deal. Actually, in office deals before COVID, but apartment deals, except for the last 12 to 15 months, you really had to try hard to screw up an apartment deal. All the leaky boats came off the bottom of the ocean. And as interest rates moved and prices kept rising, you couldn't bail them out fast enough. And people became a lot more creative at their underwriting. And, while I was trying to advise people, I was looking at some of this happening real time. Being an older American, I've seen the cycle more than once. And even now, when you talk to some of these young people that work for investment advisors and funds, it's like, oh, interest rates have to come down for the deals to make sense. I'm like, dude, you can't count on that. Well, Blackstone bought all these deals on 4 caps. I'm like, so? Maybe they hedged it, maybe they didn't. Whatever happens, happens. Not everybody can make money all the time. If someone's making, someone's got to lose. It's like the stock market. Not everybody can make.
Yep.
So it's been interesting trying to explain to younger people how the cycles work, and even now, going forward on investments and trying to help people triage some of their investments that are going a little sideways and help them understand, well, do I put additional money in when they're calling for capital? Do I walk away? Will I ever get any money back? And you have to, sit back and really ask the right questions. About the financial circumstance, how much, what percentage of their wealth this is. And then as it goes on, you find out that, they've been doing these deals since 2010, 2011. And the last couple of deals, they just figured they couldn't go wrong. So they did no due diligence, and they're dealing with different sponsors, and everybody got a lot more creative, and no one did their homework.
Yeah. You definitely sound like a guru. Do you help banks or individuals or investors with restructuring? Is that something you do?
No, I will. I do help individuals. The banks have their own institutionalized people who are usually retired bankers who they call on to do these things. But I work with individuals that want to try to restructure. Is there additional financing for them? Do they get preferred equity? Do they call capital from their existing investors to try to not go outside and so you all get diluted?
Mhm.
And just some of these deals out of distress just don't make sense. Somebody sent me a 260 unit apartment building in one of the sub markets of Atlanta. It was, I guess, a C property. And the sponsor was in for $180,000 a unit and was willing to
Mhm.
sell it for 110 a door, which was really $1
Mhm.
million over the debt. So they're trying to sell this thing for $26 million. And the only reason they were trying to sell it is to avoid a foreclosure on their record with the lender. And I still couldn't get it to work. And
This is
then it's really sad. And then some of the blame I have to put on the lenders because the lenders wanted to make loans, and uh, if you have a 7 or a 10 year floating rate loan, which is what a lot of these are that are in trouble, and interest rates have gone up, so SOFR has gone up because we don't use LIBOR anymore, and the banks didn't require you to take a full term interest rate cap, and you were happy because you saved money because they got to be
Mhm.
expensive in the last 2 years. And so now you got to replace the interest rate cap and you don't have the money.
Mhm.
And so shame on the banks. The sponsor shouldn't have done the deal. He should have borrowed less money, put more equity in. Some of these deals, you know what happens as soon as they call you.
Mhm.
Um, but
Yeah.
I still think there's going to be a lot of opportunity. I think it's a little too early in the multifamily cycle, but I do know because we're actively buying deals that there are a lot less buyers in the market right now, and you could sort of name your price. And if the seller really wants to sell, you'll get his attention.
Mhm.
Uh, and don't be afraid to ask for crazy structures like, Mr. Seller, I want you to hold a $5 million second, on my $30 billion purchase price or something. You'd be
Mhm.
surprised. I asked one seller to stay in for $5 million of equity, and he was willing to talk about it.
You might as well ask. You just never know. Right now, especially right now,
That's
it's a
right.
tough time. People are
Especially
willing to
right
do anything.
now, I think right now I look at it as if you can get a seller's attention, you're in the driver's seat. It's a buyer's market. So don't be ashamed
Yeah.
to ask.
Wow. Yeah. All your years of, I guess, being a guru are actually paying off right now. You can obviously add some value to some vendors or some banks or some investors, and there's no doubt about that.
No, it's
Um,
kind of interesting. I bid a portfolio out in the Midwest, and the seller was an interesting seller. It was an ESOP. I guess that it was part of an employee stock ownership, and they had this board, and they weren't really real estate people because they let leases expire and tenants pay holdover rent, and they wanted to sell it. They've owned it for 17 years, and I was not the high bidder, but I owned in that town, and so they
mm,
picked the high bidder because it was $2 million more to them. And today I get an email from the broker. Well, just as let you know, the seller the buyer is dragging his feet. There's still not a signed contract 3-4 weeks later. I have a feeling we're going to be coming back to you.
you're going to end up getting. Then maybe you can even get less than 2 million, maybe $4 million down.
No,
Yeah.
it's like I'm not increasing my dollar amount. There are a lot of moving parts, and as I said to them in the beginning, I said unless you're experienced at walking through the minefield and knowing where not to step, there's going to be an explosion.
Yeah.
And it's a hard deal to finance. And I think the seller just chased it because it was a 10 cap and thought he was going to make a lot of money. There's a reason for that.
Yeah, which makes perfect sense. So without saying, they probably have a confidentiality clause. You represent, I think, at least one family office. Are there? So you have to jealously guard that family office's interests. But what are some of your thoughts with kind of helping some of the investors in today's world? Then maybe you would have helped whatever 20 years ago. Meaning, how has the investment landscape changed?
I think ever since the beginning of time, people were always looking at what is the internal rate of return on a deal, what is the equity multiple, and that's always been the metric they use to make a decision. It's greed. It's like how many
Mm-hmm.
times am I going to double my money? What's my real return? And family offices by and large have looked at that, but because they function on cash flow
Mm-hmm.
for just distribution to heirs, philanthropic donations. They try never to eat into principal, so it's about cash flow.
Mm-hmm.
So although you look at those metrics, cash flow is the key decision making.
Mm-hmm.
It's like they figure, well, they say it's going to be a 22 or a 1.9 multiple, but if I'm getting 9% a year for 10 years and we sell it for what our investment is because we can't make a profit, I still got 2 times what I would have earned from buying treasuries, and I got the depreciation and the tax benefits. And in the meantime, I took the money that I wasn't distributing and I reinvested that. So I sort of compounded my own cash flow by
Mm-hmm.
being able to reinvest it. So
Mm-hmm.
it's about, it's like they always tell you the story, the tortoise beats the hare.
Mm-hmm.
Uh, so it's okay to be a little slower. Sometimes, like even in the stock market, sometimes you're going to pick a winner and you're gonna make 4 times, and
Mm-hmm.
sometimes you're going to lose it all.
Yeah, yeah.
But I think it's better to be a little more conservative and not reach for all the leverage. Years ago, everyone did an 80% loan.
Mm-hmm.
Now, maybe except for multifamily, I think it's 60 or 65%.
Mm-hmm.
And I'd rather sleep at night and know that if I lose, 20, 30% of my tenants, I can still pay the mortgage,
Yeah, yeah.
and not have to call my investors and saying, oh, we have a capital call, expenses went up, or we lost too many tenants and we have to pay brokerage commissions to replace them.
Mm-hmm.
Uh, I think people need to really take a step back and go back to basics in order to create wealth. It's not just, hitting grand slam home runs. It's about putting men on base and having them score.
Yeah, I think it's harder now than it used to be. That's what I would have said. Yeah, yeah. So you mentioned family office a couple of times. Not all of us are cool enough to live in New York City and help a family office. What's it like, generally speaking, to work with a family office in New York City?
Well, family offices, and I speak at a lot of family office conferences, so I see them from all over the country, and even some of actually, I did some consulting work for a French family office uh, years ago, and not only is it a financial vehicle, but it's also personalities, and you deal with
Mm-hmm.
the conflicts between some of the family members. They have different ideas of what they want to do, and a lot of family politics. And I look at family politics as the same as workplace politics between, people trying to get ahead of one another or one up the next person. Uh,
Mm-hmm.
but, at the end of the day, your blood is thicker than water. And so therefore you tend to tread a little lighter and sort of mind what you might say to people. You're a little more reserved, but and then there are businesses that have a lot of family members in them that just consider themselves a business. They don't really consider it, necessarily a family office, even
Mm-hmm.
though they might all invest together. Uh, and then people started these family offices because they wanted more control over their investment decisions, not just taking all the money and giving it to an RIA or a wealth manager or dumping it all in Blackstone or
Mm-hmm.
some other fund. They want to have a little more control over their destiny and the decision making processes
Mm-hmm.
involved. And as such, they become more educated, and family offices actually employ staff depending on the size of the family offices.
Mm-hmm.
Uh, and then there's also what they call a multifamily family office, where it's an infrastructure in which many high net worth people who don't want to build their own infrastructure sort of share, a chief investment officer, a chief financial officer, and an accounting department to do their books for them.
Mm-hmm.
Um, and it's an interesting dynamic. And when you think about the amount of wealth that's controlled by high net worths and families, it's just mind boggling. I saw an
Mm-hmm.
article, I don't know, it was in the Wall Street Journal or Bloomberg, that talked about like more than 25 million households with a net worth of like $2 million or more in this country. And just add some, so that's like $24 trillion of available capital that's out there. Uh, that's just on the low side.
Yeah.
And so there's a lot of money that's sitting on the sidelines, really looking for a place to be invested. When the treasury rates spiked, a lot of them bought treasuries
Mm-hmm.
because they're conservative. But I think if you have the right investment proposal, you can really find an investment partner today.
Yeah. Do you do consulting? This is a naive question. I probably should know this. Do you do consulting to family offices?
No, I do. I
Mm.
do a lot of consulting for people that are really looking to either have 1031 exchanges that are coming up, or people looking for alternatives. If they're selling a part of their business into an ESOP, they're selling it to employees. There's actually a structure that will permit them to invest in real estate instead of
Mhm.
corporate securities of domestic corporations under the 1042 tax code.
Mhm.
So it's all about tax avoidance. It's not what you make; it's really what you keep.
Mhm.
And even within real estate, whether, don't get sucked into a Delaware statutory trust. You can do, a deferred asset trust, which will give you,
Yeah.
a much longer period of time which to find a 1031 exchange. And so there's a lot of other tax structures that we get involved with when we deal with high net worths and families. Most
I
of the
didn't know
time,
you did
people, yeah, well, because we pay a lot of money to a tax law firm. The families
that.
do.
Mm-hmm.
And so over the years, my father being a tax attorney, I learned a lot of these things. And so we always look for a structure, how to accelerate depreciation. In a partnership, you could also determine how you're going to share depreciation. And who wants it first, who wants it last, who needs it. Because if you're in the real estate business, you could actually, you could offset against other income. Whereas if you're not in the real estate business, you can only use depreciation to the extent you have other passive income. So there are ways to share that and share the back end. But most of the time, I get involved with helping people find assets or asset manage their assets because there's something going on. They don't have the expertise in house to really mind it on a monthly basis and to review the financial statements.
Wow, look at that! I'm learning some stuff about you I didn't know before. I like this. So I know this is like preaching to the choir. I know you're a real estate guy, but what are your thoughts about some? I was just talking to a guy in a fund. He's representing a fund. They were 100% in real estate. I don't know when they stopped, but now they're 100% going away from real estate. So meaning again, they're real estate. That fund loved real estate, and then now they're going outside of the real estate realm. What are your thoughts about that? They're completely leaving real estate and going to whatever, stocks, venture capital. What are your thoughts about
Well,
that?
I think that this is an interesting point in the cycle, the aging cycle, where there are millions of small businesses, and there probably may not be a clear plan of succession, or there may not be any heirs to take over the business. So sometimes, the apple rolls away from the tree, the kids don't want it.
Mm.
And so I think if you're a fund, and there are funds out there that do look for these kind of business opportunities to buy family-owned businesses and sort of roll them up, in certain sectors, whether it's cleaning or roofing or things like that. I've seen a few of those, and other sectors. There are a lot of operating businesses where you can buy your way in if you're a fund or even an individual, work out sort of an installment plan, and eventually, have that operator as your partner for a while, so you really learn the business, you get familiar with the customers and the operations, and eventually, they sunset out, that you figure out what the buyout is at the end of the day. So I think there's a lot of operating business opportunities on the small business side because of the aging population right now.
Mm-hmm, mm-hmm. Yeah, I think you're right. A lot of people are getting out of business right now. They need a safety net, someone to buy into their company. Sometimes it's easier to buy into a company than it is to start up a company. Truly.
No, it is. And a lot of people at this point, if you're in your late 60s and you've been running the business all your life and your kids don't want any part of it, then you might say, you know what, I don't know how long I'm going to live. I want to enjoy life a little bit. Maybe I might, if somebody approaches me and says, hey, I want to buy in, maybe you think, do I trust this person? If you can work out the details, maybe I let them buy in, knowing that I'll sell them the rest of the business at some point in the future. In the meantime, I can take a step back, take some chips off the table, and travel with my spouse, give some money to my family, travel with my family, enjoy my grandchildren type of thing, and live a little better quality of life while I have health. Because when when you don't have your health, nothing really matters, not even money.
Yeah, yeah. Health is the most important thing. Yeah, yeah. Hopefully, yeah, no doubt. So you've done a lot. I didn't realize how much stuff you've done. What are you doing hanging out with Vast, man? I love it though. Holy mackerel!
Well, I have fun. I like to meet people. I like to see what people are doing. I like to work a crowd at a conference.
Really?
Because it's you never stop learning, and so I'll never put myself out as the smartest guy in the room because I know I'm not. There's always going to be somebody smarter, and that's the person I want to talk to. I want to hear what their thoughts are. I want to see if I can learn something.
Mm-hmm.
Can I get the wheel to spin a little faster by figuring out what the right kind of grease is, type of thing?
Mm-hmm.
And we all have different backgrounds, so we all have different color sunglasses, and we look at things from other angles. And it's good to be able to step in somebody else's shoes to see how they approach problem.
Mm-hmm. Mm-hmm. Yeah, I love it. I love it. So obviously, you've mentioned at least a couple of things to a couple of buddies about what we have going on at vastsolutionsgroup.com. What are your thoughts now that you've had a couple, even longer to think about it? What are your thoughts now as you've really been able to stew it over?
I think that, it's all about if you're going to buy property or buy a business or something, nobody wants to pay cash. So you really need to be able to finance it. So you really need to have a network that can work the debt for you.
Mm-hmm.
And, we already have 750, 780 lenders in there. And I think that if you can't find a loan, there's a problem with the deal.
Mm-hmm.
Lenders are really squirrely. I spoke to a banker today that I know for 20 years. He's changed jobs a few times, and it turns to be I think it's $9 or $10 billion bank based out of Illinois, and it was just interesting to hear what they're doing and how they approach it, and how they survived COVID, because they didn't really have a lot of exposure to multifamily, and hearing how he has to explain things to his loan committee. And then there are so many private lenders, because I get phone calls all the time, because I'm involved. People look up who's a director on an LLC or something. So I get these phone calls from all over the place.
Mm-hmm.
Oh, we want to lend you money. We want to lend you money. I want to lend you money. And I'm like, well, where'd you get my name from? Oh, you're in our database.
Mm-hmm.
And so there are hundreds of brokers and lender groups out there willing to lend you money. You may not want to pay, like borrow money from the mob type of thing, where it's like 2% a week compounded or something. So and have your legs broken. But there's a lot of money out there looking for a home, and it's all about finding someone that can work the system and be your advocate, and get your loan closed. I think that's really important. And then I also think that if you're looking at an investment opportunity, especially I could speak more from real estate than most operating businesses, don't get out over your skis too much. Look at the cash flow. Don't look at the IRR, because you can't eat the IRR. Cash flow, God forbid you get laid off. You could use cash flow to pay rent. You could use cash flow to buy groceries, put gas in your car, go on vacations, buy yourself luxuries. But again, don't over leverage. Make sure the debt service is reasonable, and look really what your cash returns are. In a perfect world, everything will work out to your favor.
Yeah, I think also you hit the head on the nail. We have over 750 lenders, so we're going to have, hopefully we're going to have something that's going to fulfill a borrower. And if not, I think what you said is exactly right. If we can't find a solution for a borrower, it was probably a bad deal, or there's something wrong with the deal. I think that makes a lot of sense. That was a good quote. I'm going to use that quote.
No, with that many lenders, you could address a lot of moving parts, and I would think someone, might not be might be a lower loan to value. It might be a higher interest rate, but at least you'll know that somebody wants to look at it.
Mm-hmm.
That's really you want to know is it a deal that's attractive in the marketplace? Because, as the lender or an intermediary, I don't want to waste my time either.
Mm-hmm.
So it's also about having the skills to know what people are presenting to you, to see if it's a deal you even want to invest any time in, because you don't want it to be a waste of time.
Mm-hmm.
And then some of the operating businesses, which can be financed, because I do a lot of industrial deals, so we look at a lot of third-party logistics and truckers, and including people that do work for Amazon or Federal Express. The guy that delivers to your house doesn't work for FedEx; he's an independent contractor. Somebody that owns those routes. Yeah. UPS has their own drivers, but Federal Express, they're third-party contractors that have routes and their own employees. The same thing with Amazon deliveries. And I know, because we have some of them as tenants, and from time to time those routes sell. But I know they get paid by the package, so you track packages deliveries. And I know when the package numbers go down, that's sort of giving me a sign of what's going on in the economy.
Yeah.
So that's why I sort of keep track on those things, because I'm sure we all see on Instagram and TikTok, some guy wants to build you an Amazon store or a Walmart store or an Instagram store or something like that. Give me $30,000 up front. I promise I'll get it. I'm like, there's no alignment of interest. Once I give you my money, the store may work for a week and you'll change your phone number. It's like, caveat emptor, buyer beware.
Yeah, that's not a good outcome right there.
So I know everybody's looking for something, and they try to get you into these affiliate marketing or something else to try to make money. Everyone needs a second gig these days, and I understand that.
And that's partially why I think you ended up, talking to us, because you want kind of a second gig, because you can add value to a lot of people. I think, and I'm glad to have you, someone like you in this organization, because I think it's going to be a big plus for so many people.
No, I'm happy to add some value. I like to be creative, especially if you have a younger staff that needs to really know what goes on in the world and really how to talk to borrowers, and also how to talk to a lender when you get them on the phone. You're
Hmm.
not going to yell at them. You got to understand. You got to reason with them, and there's a way to get them to understand. Back in over the summer, I went to finance a single tenant industrial building, and
Hmm.
I'm on the phone with Citibank, and they say, "Do you see the tenant's financials?" And I told them the whole story of the tenant. They were owned by a private equity shop, and management bought themselves back during COVID, and of course, business was bad. Oh, but you look at the sales, and what do you? I don't understand why you would want to do this loan. I said, look at the building itself. I
Hmm.
said, I'm buying a building for $70 a square foot. If I had to build it without the land, it would cost me 140. Do
Hmm.
you understand real estate? Are you a lender? And they
Yeah.
call me back 2 days later. Oh, we did some checking. We like the deal. So you have to understand how to explain things to the lender to get them to come to your side.
Hmm.
And I think the younger people don't really have that because they spend too much time like this,
Hmm.
with texting, and they don't have this rapport from actually having verbal conversations.
Hmm. That's a little sad, by the way, and more than a little sad. Yeah, I understand. So obviously you can tell you're a good guy. We've been together for whatever 20 something minutes. What's it like to work with you as a, let's say, as a borrower, number one, or number two, as a, let's say, a loan originator who's been in the business for 10 years? What would you say to that?
I'm very transparent, whether I'm your lender, whether I'm your broker, whether you're investing with me. It's about transparency. I'm upfront. There's no hidden agenda. There's nothing hiding. I'm not. I'll tell you what the financial story is, good or bad, and I think that's important to build trust with people. You got to tell them what's going on, and you got to tell them really what you think the probability is. Especially if I'm trying to work on a loan for you and I see a problem, um, like you're telling me, you give me a rent roll, and you say we need to get this loan done, and I'm like, well, you look at all these leases that expire within the next 9 months or 12 months. I said this is going to be a problem for the lender. If it's something you own already, I said let's go talk to the tenants. Let's see if we
Hmm.
can induce a couple to renew early, so you don't have a huge holdback out of your loan or a reserve set up, because the lender's going to automatically assume everybody's leaving.
Hmm.
And so it's about advising people how you would approach things as a borrower or as a lender, and having them walk in somebody else's shoes. It gets them to appreciate what the process is. And it also helps them the next time around where they know to button these things up before they call you.
Hmm. Wow. Wow, your stuff's really insightful. And I'm not just saying that. What would you say, Erwin, if someone were now helping to recruit? Let's say you're helping to recruit someone. They're a broker. No. Let's say they work in a bank and they're making whatever $200,000 a year. I'm not saying that's a lot or a little. $200,000 a year. Their bank is saying no, we can't really do any more loans. Really, to this person, they don't know if they're going to be around in 6, 7 months. What are your thoughts about maybe? How would you recruit them over to vastsolutionsgroup.com in that regard? What would you say to them and try to bring them over to our platform with 750 lenders, et cetera, et cetera?
Well, I guess the first thing I'd want to understand is how they source their loans.
Mm-hmm.
Are they direct relationships? What is their business 80% brokers, or is it 80 or 90%, existing direct relationships? Because for Vast Solutions really to have control of the deal, you want those to be direct relationships,
Mm-hmm.
because you don't want to be dealing with a broker who's showing you the deal and showing it to 15 other people. And
Yeah.
it becomes a beauty contest, and you look about probability of closing. And so that's the first thing I would ask somebody. Uh, you also want to find out what they liked about working for the bank, what they didn't like. What were some of the borrower comments? You're always short on dollars, were you high on rate? Your closing costs were crazy, your reserve requirements. You want to really understand what the borrowers thought of the lending institution.
Mm-hmm.
And to the extent we have, some history on people we've closed with, we could share, well, of the 750 lenders, we have a lot of history on these 50 or 100 of them. And they're usually pretty aggressive on rate. They're usually pretty aggressive on dollars. They're easy to deal with. Here's what their timeline is. And so we'd want to give him enough ammunition to where if he decided to come, where we were confident that he would succeed, that his borrowers would follow him. I don't want anyone. I'm not going to recruit anyone that I'm going to leave out there, in a noose and see if they hang themselves or not. I want them to succeed. So I want them to be fully confident of what there is to offer in any job, and how what we have on the menu can help somebody succeed.
Mm-hmm. Yeah. It's giving me something to think about. So, and this isn't even a leading question. This is a legit question. I cannot figure this out. Why is commercial property loan origination back in the Stone Ages? Because it really is. I mean, people are still using applications to get loans. They go to one bank, they hear a no. They go to another bank, they hear yes, but it's a bad rate. Then they have to go, versus having a big platform, because there's more and more platforms out there where they can, go to 750 lenders versus just one. Why is it that commercial property loan origination is so old school?
That's a fairly good question. I wonder that myself, because even when I go to finance property, I have my 4 or 5 go-tos that I've done multiple loans with, and I have my own loan documents with, and I know the process. And it's not necessarily I have to fill out an application like you think about it, but there still is going to be a term sheet that they're going to want you to sign, that you negotiate, where if you were automatically putting it into a system and then giving you a matrix. Here are the 10 lenders across the top. Here's the loan amounts. Here's the rates. Here's the other, conditions. And then you could say, well, I got a Chinese menu, and I know you got to pick, 1, 2, 3, 4, or 5. These are the best ones on the top. And I think that would streamline the process for a lot of borrowers. A lot of borrowers don't have the staff to do it. You probably would make a lot of enemies with the mortgage brokerage community, because that's how these people try to make a living, by shopping these deals. Yep. It's how they make their money. And then they put this matrix together, the spreadsheet, and says, all right, here, Mr. Borrower, here, I went to 30 lenders, here are the top 10 deals. But if this could be done online and a lot faster, with feedback, in an hour or two, to the extent that could be automated, I would think that's good for the borrower.
Yeah.
So I would think that more people should look at a platform like that.
Yeah, I think that's going to happen in the future. We're just kind of disruptors because, some of our AI plus our platform partners, it makes it easier for the borrower to look at, so many different banks or lending institutions. And then hopefully that'll want the borrower, the broker looks better because they're coming back with quick information. Plus, usually the rate's a little bit better because there's so many different options. Well, again, then I have one other question. People laugh at me because I come from the tax side. We've been in business since 1969. Me and the company. I haven't been working that long, by the way. Thanks for. We get paid first before presenting the idea to the client. Why is it in commercial property loan origination that that's not the case? You guys could do mass work and then not even get the deal done, or all of a sudden someone go around you, or someone go to another broker and they go to another bank. Why isn't the people in the commercial loan world don't get their deals up, or at least partially paid up front?
Well, that's why you do have some brokers that ask you to sign a fee agreement that says they get paid regardless of they place the loan or you go direct or to another lender. There might be, if you place it, you get a full fee, or if they go around you or somebody else does it, you get half a fee. That's why I see a lot of those agreements. I know I've worked with some of the big shops that way, where if you place it, you get a fee, and if it's an existing relationship of mine and you manage the process for me, you get a reduced fee. Of course, it helps me out with my time, because they know exactly what the lender wants, and they're my advocate in case I'm not available. But yeah, you do a lot of work, and that's why I guess we look to get paid pretty well when it does happen.
Yeah, so what do you think about retainers? Because part of me is thinking, because we have lawyers who work here in CPAs, part of my thinking is almost on every deal, to the extent possible, our people should try and get a retainer, at least X, 500, 1,000, whatever the number is. Do you think that's a good idea in general as a protocol?
I think you're gonna get a lot of resistance because it's something different. No one's doing it, and I just think it's gonna be hard.
Yeah.
I think that if you can deliver, people always come back. and they won't question. And so the more, especially it's like as I deal with investors, the more deals they do with me, and they know that I always under promise and over deliver, then the investor's coming back for the next deal before he goes anywhere else. And I get those calls. Look, I got some extra money. What are you working on that I can invest in? And so we appreciate those calls. So here you're going to get the same call from the repeat borrower that says, "Hey, I'm doing this other deal. I want you to run with it because you've closed on the last 3 or 4 or 5." So I think over time you develop a track record and people trust you, and there's a much lower probability of you not getting paid.
Yeah, I understand. I got you. I'm fine with you. All right, let's get ready to land this plane. So, what's something that we have not talked about that you think could add value to it? Either an investor, a borrower, loan originator, someone who's new in the industry, your industry, or someone who's been in it for a long time. What's just one thing that we've forgotten about?
Well, I think that when you read about the Trepp came out with it, and Fannie Mae came out talking about the trouble in the apartment industry. So I think that some lenders may be pulling back a little bit on the lending parameters, or worrying that the expenses presented aren't actually the operating expenses. And there's actually a big mortgage brokerage shop that allegedly did something that they're under investigation by Fannie Mae and Freddie Mac. And so, so I think people are going to scrutinize your expenses a little bit. And if they think that they're very low based on industry standards, they're going to underwrite with their own expenses. And if I was a buyer, even though you're making representations, but usually reps and warranties only are good for 6 months after closing. And you don't usually find stuff that fast. It may take a year and a half. So be eyes wide open, especially if you're a buyer or an investor. Ask lots of questions, and people should be cooperative. Like someone sent me a portfolio that I want to invest in these 3 buildings in Houston, Texas, and they were buying these 3 beautiful high-rise buildings from a major developer, manager. And their business plan was, it was Houston. They're going to take them from 88% occupancy for 92% occupancy, and at the same time increase rents 15%, all in a 3-year period. Then they showed a big refinance cash out, and there's your IRR, your multiple. And I said, wow, if they couldn't do it, and they built the buildings, how are you going to do it?
Yeah, totally.
So I said, send me the model. They sent me a PDF. I said, no, send me the model. I want to see what your assumptions are. What do you need those for? So there should be certain red flags when people aren't giving you information, whether you're a lender, whether you're an investment, an investor, whether you're even the intermediary trying to shop the loan. If you can't get information, that should be a red flag for you. People should be pretty transparent and give you what you're asking for. There's no reason not to.
That's a very good lesson. And hopefully, people here watching and hearing take what you're saying to heart, because it totally makes sense what you're saying. I mean, I got to think that a lot of the people who are getting ripped off or who have gotten ripped off, it's because of lack of information. It's hard to make a decision when you have you don't have some information that's needed.
No, and I think the last 2 years they also investors especially became lazy.
Lazy, yeah, totally.
That they became, I guess, for the first, if you were investing since 2010 or 11 in apartments, in the last 2 years, you said, what could go wrong? Everything's been golden. And that's when everybody got really creative with their underwriting. Lenders didn't buy the interest rate caps. And so now everybody's sort of crying. Yeah. So you got to pretend that you're going to lose your money, and are you prepared to lose it? Yeah. And then it's about also screening the sponsor, who you're investing with. Yeah. Do they really have skin in the game, or is it all fees for them? Like if you invest in a fund, chances are they have no equity in the deal. It's all about the fees and the promote. If you're investing with on a one-off syndication with a sponsor, and you see that they have 20% of the equity in there, there's a good chance there's an alignment of interests, and they're going to protect their money just as much as they can protect yours. So that's just food for thought.
Yep. Yeah, it's good food. It's good food. It's lasagna.
If it's too good to be true, it usually is.
Yeah. And I hope
be wary of people. Because even now I see advertisers for sponsors, guaranteed return. I'm like, you can't do that, that doesn't happen.
pretty rare to do that. Yeah, it's pretty rare to do that. So, wow, this has been huge, man. I could spend all day with you. You've got your wealth and knowledge, but sadly we have to close up shop here. So, what I would say is thank you very much for taking the time.
My pleasure.
Not only you, but also for all the listeners and viewers out there. I really appreciate it. Please stay tuned for the next episode, on The Vast Voice. This is Ken French, and I'm out.
Thank you.
Dude.